What is up, guys? My name is Dave Colagiovanni, the owner of SUPRA Inspections. This is the SUPRA Show, Season 2 podcast version. My co-host, Doug Tricarico, with me. Our first guest, Marc Cox from MIOYM Equities in Rye Brook, New York. Marc, really appreciate your time. Tell us a little bit about MIOYM Equities and how you got started with it, and sort of where did it come from?
MIOYM Equities is a real estate investment firm. I got started back in the 1990s. I got started pretty much in the mortgage industry.
Yeah.
I used to run a mortgage company, residential, and to try to diversify the refinance from the purchase market, which you depend mainly on realtors like Doug is here. I wanted to be able to buy and sell homes.
Yeah.
So the obvious transition from buying and selling homes and then owning your mortgage company, the market crashed. If you may remember, maybe about 2006, 2007.
Yeah.
I then went into non-performing loans, working for a hedge fund. They shared with me how to reposition mortgages nationwide.
Wow.
Then went into recognize that a lot of the money that I was borrowing from different investors, in essence, I was managing their money, even though it was loans, and obviously made the progression to retail investors, institutional investors, and the combination of all four: homes, buying and selling homes, doing mortgages, managing investor capital, all created a private equity firm that is in real estate investments.
Wow. And so how's the company grown? From, again, you started this company yourself. What does the company look like today?
Today we are in 38 states as far as our redevelopment is concerned, where we buy, renovate, and sell homes to first-time home buyers. It has grown to managing probably about maybe between 300 and 400 million of investor capital. It has grown to lending. We are able to do commercial loans. We do that nationwide, commercial, not residential. And we also have begun our multifamily fund, which concentrates on opportunistic value add for multifamily assets, mostly on the East Coast, Texas, but pretty much. So it's definitely grown where it's the capacity is my mind. So I wanted to see these things, and life has made it that way.
Well, I mean that's awesome. That's So how was because you've seen this market sort of play out for a while now, and of course it's changing. Just like anything, but where we are now as opposed to what you could project in the next couple of years. Like where do you think investing is at? Will it sort of level off, or will it kind of keep the projection that it's been on?
Well, hopefully it won't keep the projection it's been on. We hope that. But investing from those that are before me, it's the same thing. You stay steady. Yeah. It is cyclical. It goes ups and downs.
Yeah.
The things that you're seeing now in 2023, again, we saw it probably in 2009, and I'm pretty sure before then. So it goes all the way back to the Great Depression, right? It goes up and it goes down. It goes up and it goes down.
Yeah.
And as it goes up, everyone comes in to try to capitalize. As it goes down, it thins out those that don't have the stomach or the capacity. So it goes up and down, just like life. And you just have to be stable, grounded, and stay focused, and you can make it through.
How has the real estate industry and just realtors in general, what does that do, to your business? How do they help? How do they hinder investments?
Realtors?
Yes.
So realtors are, and I have to be careful because I have one sitting right here. So realtors are essential. The reason why they're essential is because they have access to the inventory that most banks or sellers give them because they don't have the time or the capacity. So that creates an environment that they now can facilitate. The realtors also are able to find individuals for the service that they render, to find individuals to help them facilitate their dreams, to buy homes or to sell homes. So realtors are necessary for that. Like any person in any industry, you have the top of the line realtors, you have the middle of the row realtors, and you have the low end realtors. So it behooves you to find professionals that meet the same energy that you have to be able to accomplish the goals that you want. But we use realtors mainly for the selling of our assets, not necessarily to buy our assets. We buy direct to either from banks or off market or individuals. But we use realtors to sell our assets because they have access to the public, and it's a necessary asset.
Definitely. Doug, you got anything to add to that, or just any real estate question as far as investment goes, and like as far as being a realtor, like getting involved with his firm, and what does that look like as far as like trying to get involved in the selling of these assets?
So, I mean, you have to know what you're doing. A lot of them, they're going to be houses that they put money into, so they're going to want to make sure that they sell quickly for maximum amount of profit. You're going to have to sometimes sell them information that they don't necessarily want to hear, regarding things that need to get done in the house, things that have happened, or what they're going to have to put in to get what kind of return. I mean, I met Marc about 8 years ago now. When I just came, I think so. When I just came back to real estate full time, and we were doing a deal that never ended up happening, and I think he kicks himself in the back ever since. And I was young. I was like, "You got to buy this house. You got to buy this house." And I was doing everything I can. We drove around the neighborhood explaining to him. And someone else got in his ear, and the ceilings were too small. Well, someone ended up buying it, knocking it down, and selling it for $2.7 million.
Oh wow! No way.
We had it locked up at $600.
No, that's crazy. All right, so like, but
that's okay because that's how we met. Right?
Yeah, so, that's it. Okay, done. Yeah.
No. But it develops trust, and especially buying in areas that you can't necessarily touch and feel the asset. You got to have a high level of trust of who you're putting responsible for these homes.
Yeah. All right. So like, what can a realtor do to really, make himself, available to, to doing business with you guys?
Valuable to us.
Yeah.
We like realtors that are accessible. Yeah. Picks up the phone when we call.
Yeah.
We like realtors that are efficient, sends us the information that we need to be able to make an intelligent decision. We like realtors that are aggressive.
Yeah.
You have some realtors that it's just life, right? You have some realtors that will take information and they'll just put it on the multiple listing or put it online and wait. Right, for the world to come to them. You have some realtors that put things online and aggressively market to people to make things come to them. So you have, and that's people.
Yeah.
There are some people that are aggressive. Some people, I think they say there's some people that stand still. There are some people that make it happen, and some people that wonder what happened.
Yeah.
Right. So it's realtors are just like people, just like doctors, just like anything else. They're just
not
people.
Aliens.
Right, they're just like people.
Yeah, and now getting to the investor side of this, I mean, what's something like, investing in anything, of course, it's always like, it just sounds long term just to begin with, but like in year one of someone looking to invest money, I mean, what should they be doing in year one, as far as, how to get started in investing?
What tips do you have for somebody that wants to get involved in investing in real estate?
You got to parse that. because you have two different types of investors. Are you speaking of the investor who wants to buy a property, renovate it, and sell? That's an investor. Are you speaking of a passive investor who wants to invest his capital, a doctor, a lawyer who doesn't have the hands-on but wants to get returns? Are you speaking of an institutional investor who's just trying to deploy their capital for returns for their investors? So you have three different types of investors.
Where's a good one to start?
Let's go with the person that wants to get involved in investing in real estate. They don't know how to start. They are handy. They might have some money saved up. What do they need to get started?
Like residential.
So that type of investor that wants to start out buying a property, renovating it, and selling it, I think the first thing is that they need to do their research. You don't want to, a lot of people just think, they watch television and they watch the
blonde lady with the sledgehammer and the whole wall comes down.
The HGTV, we call it.
Oh my gosh.
And it never loses. It's always at the end of the commercial and they made X amount of money.
Wow.
So that's not true. So the first thing is do your research. Do your research to make sure you can see the end. You have to see the end of your transaction.
Wow.
Money is made when you buy, not when you sell. So how much are you going to buy the property for? That's number one. Number two, how much is it going to cost to add value to that property, which increases the market value, where you need a realtor to be able to share with you what the reasonable comparables are in that area. The individual then needs to be able to have some kind of knowledge about construction. They don't have to know it, they're not a professional, but at least get 3 or 4 quotes from various different individuals. And you definitely want to monitor, because you want to make sure, I think the statement is, you expect what you inspect. So you don't want to stand still and just think that the contractor is going to do, put in the kitchen that you want, right? So you want to be able to be in control of that, to know what's going on, hands-on. You want to be able to make sure that you seek your financing. What kind of terms are you trying to borrow at? Because that predicts your cash flow. And your carrying costs. You want to make sure that once you sell the property, how are you going to sell it? How long will it take to sell that you may have to carry that property until it sells? So you want to be able to, you didn't ask me, but there's always, at least for me, there's a spiritual context. And that spiritual context gives you the statement of a man has to count the cost before he builds his house. Right? So make sure you know all your numbers before you get into it. Otherwise, it also says that, the hand of the diligent make it rich. So it goes on the opposite way. If you're not diligent, you'll end up poor.
Wow. That's good stuff.
What are some common mistakes you see beginning investors make?
Their expectations are unrealistic. So the first thing that you want to do is set realistic expectations, goals. Goals in terms of how long you think this is going to take. How much money do you think you'll make from it? You want to be reasonable and realistic. You don't want to, wealth doesn't come, or riches doesn't come. It actually, so it goes in opposite. If it's easy, it's going to be trouble. If you work hard and it's diligent, it stays with you. So set realistic expectations as to what, and it's a slow race. It's a slow race. It's a marathon. It's not a sprint. And the accumulation over a period of time is what makes it sustainable.
Yeah, no, the expectation thing is huge. And I can also see investing as extremely emotional. And emotion has got to be big.
One of the best things he's ever told me was don't get attached to the house.
Yeah.
And don't be emotional. So the contrary statement, don't be emotional.
Yeah.
I'm pretty sure we've all read about Warren Buffett, and the statements of, so, the stocks go up, the stocks go down. Most investors want to sell when the stocks are going down. And you automatically going to lose, but you haven't given the market time to recover, to stabilize, and to appreciate back again. Same thing with investing in housing. In this season right now, the houses have gone down, the interest rates have gone up. this is just a period of time. It's just a season. And so if you're strong and if you are stable and if you are not emotional, but intellectual, then you will ride out the storm, and then you'll be there when the storm turns into sunlight.
One of the best things I have for people that want to get into investing is buy a multifamily house, move into there. You mentioned that you are starting a real multifamily portfolio or multifamily section of your business. Tell us a little bit about that.
So the multifamily side, and that's two parts. Number one, those individuals that you're speaking of that want to buy a home and they want to live in that home, that's generally what's called a 1 to 4 unit. It still is multifamily, but it's 4 units, it's max. So it's termed as single family still. And those individuals, yes, they can start off that way. They can buy a home that has a separate unit that they can collect rent on, and then they can live in it. And then hopefully that rent will not only pay their mortgage, which allows them to live free, and they can then use that as their first and then go on to the second and go on to the third. So that's the individual one. The multifamily space that we are starting is more along the lines of 100 units and above. So your apartment buildings, things of that nature. That is, it's just a diversification from the single family. It's the next progression. That multifamily is same aspect. You have, multifamily buildings that are distressed. It's vacant, especially with what happened with COVID. A lot of people didn't want to be in such close quarters. And because of COVID, and they didn't want to be in such close quarters, and they wanted to be out, in single family homes, and they wanted to be out with land, because remember, you had to be 6 feet apart. So what happened is that because a lot of those people decided that they wanted to move out, that created vacancies in those apartments. And those landlords obviously still have to debt service it and pay for it. And so it becomes distressed. And we come in and, in any market that's up and down. So we come in opportunistic. We acquire those buildings as they're distressed, helping the sellers, taking it off of their hands, and then we reposition it, and then we have the capacity to be able to hold it and bring in new tenants, new people. You see, COVID is somewhat stabilized, and now people feel that if we use Manhattan, I think that was the big thing. And people have now come back into Manhattan, where all the multifamilies are. So the point is that, again, non-emotional, intellect, know where you're going, set realistic goals, and we hope to be able to, have a portfolio of multifamilies just like we do for single families, and we hope to be able to add value to those that want to live in, a city life, if you would.
Now, I recently heard about a program that you have for people that are trying to get into their first house, rebuild in their neighborhoods. Tell us a little bit about that.
So that's a different section of our company. That is the Affordable Home Program. So the Affordable Home Program is a program that I wouldn't say that I created, but just based on my experience, was able to put together to see if I could offer a service to the public as opposed to just buying and selling, right? That's one part of our company. And we have to buy and sell because we have to, create value for our investors. But what I found is that, okay, so we buy and sell, and that's good for the neighborhood, that's good for the municipality, puts it back on the tax roll. But how do we actually help or impact people, human beings? And so what we tried to do was say, well, listen, again, using realtors, instead of going to, after we've, bought a distressed home and after we've added value, and now we've made it, a really a good asset, you say, well, listen, normally we would just sell it to a homeowner who has the capacity. They have good credit, they have the money, they have the job, but most times out of 10, those individuals are picky. Then they should be, right? They've got good credit, they have the money, so they want to choose what's the best outlet for themselves. And that's where, you heard the statement, realtors come up with location, location, location. So I felt as though a segment of the population, wasn't really being serviced, or no one was really helping them, and they were marginalized. They want home ownership, but they don't have any money. They want home ownership, but their credit's bad. They have income because obviously they rent, so they're obviously able to pay their rent, but they don't have those two things to own.
Wow.
So we came up with a program to say, well, okay, you know what? Because we own these homes, because I own the homes, because we have the capacity to make our own decisions, we don't have to go the way of everyone else. We could do something different. And we own it, so it's our choice to do something different. So we decided to say, well, listen, this is what we're going to do. We're going to sell these homes to these people. We're going to give them an opportunity for home ownership. So how do we do that? So how we do that is we go to the market of renters, those renters that are already renting. They already have to have their income, pay stubs, W-2s, verifiable, fine. That means they can afford their rent. And we all know mortgage payments are usually less than our rental amount, right? Okay, fine. So they obviously can pay, let's make believe they can pay $2,000 a month, $3,000 a month, whatever it might be. They can pay that, no problem. But the credit's not good and they don't have the money. So we came up with a program called limited occupancy. What limited occupancy does is it in essence says you still have to have your income, fine, but your credit doesn't have to be a factor. And why doesn't have to be a factor? It doesn't have to be a factor because what most mortgage companies do is they offer programs. Let's say we use the FHA program. FHA is the Federal Housing Administration. And in that program, FHA truthfully doesn't have credit score. It's not credit score driven, right? For this purpose of this conversation, FHA allows you to go down to 500 on a credit score, FICO score. However, most banks, what they do is they put on what's called overlays. And the overlays are to be able to and I'm not going to unpack that, but anyone can find out. And they put on those overlays to say, well, listen, FHA is going to guarantee the loan, but we want your credit score to be 620, 640, 700. But the truth is FHA doesn't require that. It goes down to 500. And you have some mortgage companies that will allow 580 as a credit score. The point of the story is that we find or assist these individuals with locating true FHA lenders that are not credit score driven, that will allow them to obtain financing not based just alone on the credit score. That's number one. Number two, and we also will assist them in repairing their credit, not the normal traditional ways that, listen, you got to pay this off and pay it down to a certain percentage of your debt so that your FICO scores increase. We do things simple. You've already rented, so let's take your rental history and add that to your credit score. You already have a gas and electric bill, you already have a phone bill, let's take that payment history and add that to your credit. So those things that you're doing on a normal basis just needs to be added to your credit, and now your credit score will, get a true picture, correct, and it will, of your payment history, and it will increase. So you already have income. We now assist you in fixing your credit. So now the money, where am I going to get this down payment? 12,000, 15,000, all at one time. And that's the key, all at one time. So what we do is we allow the individual to move into our home, to live into this brand new home for the same amount that they're paying in rent. We've repaired your credit, or you have a time frame to repair your credit. And we allow you to make your regular rental payments, and we choose, because we own the homes, we choose to credit you back the amount of money you paid in rent. So in essence, technically you could say, well, doesn't that mean I'm living free? For a period of time, yes, you are living free because the money that you're paying in rent, we choose to give it back. But do you always have to make all the money? Can't you just make some of the money? Can't you just say, well, listen, you know what? Here's a chance for you to get in. So it becomes beneficial for everyone. So the benefit is that we bought it, we renovated it, we're going to sell it to you. You can now move into your home. You can move into your home. You didn't have the down payment, but you're paying your rent. And we elected to give you back that money or credit that money back to you. So now you have your down payment, you have your credit, and you have your income. Now you can have home ownership where you didn't think you can do that before. And we have stories. If I just say this one part, we had a story of a lady. I never forget it when it happened. She was in Ohio. She was in Ohio. So if she sees this, she'll know who it is. We always made a statement of, this is your friend from Ohio. I didn't know her. She didn't know me. I've never been to Ohio. And I remember the day she got a yellow, when you don't pay your rent, they evict you and they put a yellow sticker on your door. She got a yellow sticker on her door. She was about to be evicted. That's the beginning of the eviction process. And I don't know how she found us. I don't know, because we obviously didn't solicit her, right? I don't know how she found us. And she called and said, listen, I'm being evicted. Do you have a house that we can? Most people are going to say, you being evicted, that shows you can't pay your rent. I don't want you in my house. And I remember saying to her, have a little bit of faith. I'm a stranger. You don't know me. This is what the program is. She said, you're going to let me into this house and such. Have a little bit of faith. That was the key. The lady moved into the house. She had, remember, all she had was the money to put down her security deposit. And what was her alternative? To take that money to go get a U-Haul truck, right? So you can go, I got this eviction, I'm gonna go get a U-Haul truck. So the negativity just piles up, piles up, piles up. So the faith has to be, okay, I know it looks bad, but I believe it could be something. And remember, I'm a stranger, so you don't know me. The lady went and she got into the program. And we let her go in. It was fine. She had the income. She still had to qualify. Remember, we're not Santa Claus. We're not doing a favor. She still had the income to qualify. I think she had some bad times, so she couldn't pay, whatever her situation is. With us, she's starting fresh. Whatever was your past was your past, excuse me. She's starting fresh. And she went into the property, and she paid her payments. 6 months, the lady had home ownership. And here was the funny part. So her husband didn't believe. Her husband was like, this is some kind of scam. This doesn't exist. Who is the, right? Yeah. Now, mind you, she had to get a lawyer. Even the lawyer said, if those people are willing to do that, you better take it, right? Same thing. She went through the program, and the lady purchased her home. And I remember saying to her the day that she was going to go to closing, again, never met this lady, only talked on the telephone. And I remember saying to her, now you got a testimony. Make sure you show your husband, and make sure your husband tells other people that it's possible, right? And it was just knowledge. I didn't do anything special. It was just a matter of telling her about a program of FHA that she could do. It was just a matter of me making the decision that I don't want you to buy my house right now because you don't have the money. I'll give you time, which maybe most people may know as rent to own. I'll give you time. And I made that decision. And the lady got in. My investors, they got their money. The lady got a house. The contractors got work. So it was beneficial for everyone. And once I recognized that, then it was like, you know what? Let's do it for everybody. And now we do it in 38 states.
Wow. Mark, that's a product that's incredible. I mean, it really is. But either way, I mean, so that makes up our time for this session. Marc, we appreciate your time, man. That was some really great stuff. You're going to reach, some people that just, are really going to need some good hope in their future as far as investing and home ownership. Really great stuff. And
a lot of knowledge packed into a short amount of time.
Yeah, without a doubt.
Thank you for being on here with us.
Thank you for having me.
We appreciate it. Well, that wraps it up for this session of the Super Show. Thank you guys so much. Have a blessed day.